Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh and welcome to our respected lecturer, Sir Wan Muhammad Farid bin Wan Zakaria. And today we will be presenting about our company analysis regarding the two sectors that we have chosen, namely telecommunications and retail sectors. This is our table of contents. This table of contents will showcase our research that we have done all the way from section 1.0 introduction all the way to 7.0 for conclusions. Next, I would like to introduce our team members, which is me, Muhammad Nuqman bin Muhammad Nawi. Next, we have Muhammad Ashraf bin Azman. Next, we have Muhammad Amir Hamzah bin Nazrul Aidil, Muhammad Azhar bin Nur Azman, Muhammad Nakib bin Nurul Hafiz, and last but not least, Muhammad Luqman bin Rozlan. Without further ado, we will move on to our first section, which is introductions. An adept understanding of both fundamental analysis and also technical analysis is required for anyone to start investing in the stock markets. In this report, however, we choose on technical analysis to do our research. Technical analysis is by definitions is a forecasting price directions via technical indicators. This is stated by Securities Industry Developmental Corporations, SIDC. The two sectors that we have chosen for this report is telecommunications and also retails. There is four types of companies that we have chosen for this report, namely Telkom Malaysia Berhad, Maxis Berhad for telecommunication sectors, and also Mr. DIY and EcoShop for retailers sectors. The time frame that we have chosen for this report is 1 year, starting from July 2025 until July 2026. And the main applications that we use to collect data and find the intrinsic value of the company itself is through trading views.
Good morning everyone. Today I present the overview of Bursa Malaysia performance and the FTSE Bursa Malaysia KSI. So first, Bursa Malaysia is the main stock exchange in Malaysia where people can buy and sell shares of listed companies. It is important because it helps companies raise money to grow their business while giving investors the opportunity to invest and earn returns. So the performance of Bursa Malaysia depends on several factors such as economy, investor confidence, inflation, interest rate, and global events. Although there have been some economic challenges in recent years, Bursa Malaysia has remained quite stable. This is because some sectors continue to perform well, especially the retail and communication sectors. So for this report, we selected 4 companies from the retail sector, which is Mr. DIY Group Berhad and EcoShop Marketing Berhad. From the communication sector, we selected Telekom Malaysia and Maxis Berhad. We choose this company because they represent two sectors with strong demand. The retail sector benefits from customer daily spending, while the communication sector continues to grow because more people rely on internet and telecommunication services. So next, I'll explain the FTSE Bursa Malaysia KLCI or FBM KLCI. So it is the main stock index in Malaysia and consists of the 30 largest companies listed on Bursa Malaysia. The FBM KSI is used as a benchmark to measure the overall performance of the Malaysian stock market. If the FBM KSI goes up, it usually means investors are more confident and the market is performing well. However, if the index goes down, it may show weaker market sentiment due to economic or global issues. Although our selected companies are not all part of the FBM KSI, their share prices are still affected by the overall market performance. Based on our report, the share price are RM1 ringgit 1.67 for Mr. DIY, 1.43 for EcoShop, RM7.55 for Telekom Malaysia, and RM3.47 for Maxis Berhad. That's all from me. Thank you.
Next, we move on to 3.0, which is sector overview. In this section, we will explore about why we choose these two sectors, namely telecommunications and also retails. The constituents of telecommunications sectors company that we have chosen is Telekom Malaysia Berhad and also Maxis Berhad, while the constituents for retail sectors is Mr. DIY Group and also EcoShop Marketing Berhad. Why the rationale of why we choose these two sectors is because of their characteristics. For example, the telecommunications sectors is more defensive in its characteristics as compared to the retail sectors, because the retail sectors are more inclined to react to the economical cycle of the nation. For example, when the nation itself is facing a severe deflation cycle, the users, the citizens themselves will have their purchasing power reduced, and thus will affect the retailers sectors, because the citizen does not have the purchasing power, they does not have the money anymore. While the telecommunication sectors, because it is an essential needs nowadays, because we cannot live without internet nowadays. Our livelihood is dependent on it. For example, to buy food, or to work, or to go to job, or for anything. That's why it is highly impertinent for the telecommunications sectors to be defensive for their characteristics. Next, for section 3.2 and 3.1, telecommunication sectors and overview of retail sectors. Telecommunication sector is mainly involved in businesses regarding internet services such as mobile internet, broadband, and also a fixed line internet basis. Example of company in these sectors is Telkom Digi Berhad and U Mobile Sendirian Berhad, Red One Network Sendirian Berhad, and also the company that we have chosen, Maxis Berhad. The main characteristics of this sector is it is mainly defensive, essential in demand, low reactivity to economical cycles. Why it is defensive? Because when economical cycles shift from inflation to deflations, this sector is not largely affected due to the reason it is an essential need in everyone's daily life. Key development in this sector is during the November 2023 until November 2025, when Malaysia's increased their productions of dual 5G network model. The subscriptions increased from 4.6 million all the way to 28.7 million in November 2025. Next, we move on to the retail sector. In this retail sector, it is different in characteristics, centered on consumer goods, retail, and more sensitive and reactive towards the economical cycle. It is purely the characteristic of retail sector is purely cyclical. Cyclical in ways it will follow how the economic cycle of the nations act. For example, when it is in inflations, the citizen would have high purchasing power, while in deflations, the citizens of the nation would have reduced purchasing power. This performance in these sectors in this period was quite resilient rather than whole cyclical. And these two companies that we have chosen, which is Mr. DIY and EcoShop Berhad. Malaysia's retail industry recorded a 4.6 growth in quarter 3 of 2025, double those of the expected growth. This is supported by government initiative, which is SARA, and SARA has injected around 11 billion ringgit into purchasing power for the citizens. Next, we move on to section 4.0, which is comparative analysis. The selected sectors, which is retail sectors and telecommunication sectors, with FTSE Bursa Malaysia KLCI. In this section, we will do a deep dive study on telecommunications, consumer products and services relative to the market benchmark, which is FBM KLCI. Next, we move on to the telecommunication sectors versus FBM KLCI. FBM KLCI and the telecommunications sectors historically move in a correlated manners. However, during last year of August, there happens a market divergence whereby the FBM KLCI continued its bullish trend while the telecommunication sectors dropped sharply. This signifies the sector is significantly underperforming as compared to the broader market benchmark. FBM KLCI benchmark increased by 8.12%, while the telecommunication sectors dropped by 17.52%. The conclusion that we can make from this is the broader Malaysian stock market, FBM KLCI, delivered a healthy positive gains, while the telecommunication sectors are heavily dragged and significantly underperform the benchmark rules. Next, we move on to the consumer goods and services versus the FBM KLCI index. FBM KLCI index exhibits a more resilient structural profile as compared to the consumer goods and services. Over the observed time frame between the July 2025 until July 2026, consumer products and services experienced a severe downtrend from February to June, briefly dipping near the 0.0% baseline, keeping it strictly below the FBM KLCI index. Performance and divergence of these both indexes is FBM KLCI do the overtake of consumer index in absolute performance metrics, while the technical divergence crossover occurred and the benchmark asserted its dominance over the individual sector minimum. Strategic viewpoint that we have concluded from this research is FBM KLCI currently wins on relative strength and trend structure, while the consumer index behave as a class attempting a late stage relief entry. Next, we move on to our sector comparison matrix. In this matrix, we will identify and showcase between the differences between the two sectors and the benchmark. First, in the telecommunication sectors, the year-to-date profit is down by 12.22%. The MACD status showing bearish status, while the RSI indicator showcase 51.92%. This will show the trend overview as strong downtrend, while consumer products and services is year-to-date is increased by 5.32%. Their MACD status remains neutral or quite weak, and the RSI indicator showcase 61.65 value. The trend overview that we have concluded is sideways, while the KLCI status, the benchmark index, remains at 12.36, the highest year-to-date, and their MACD status are bearish because it is lower than 0, while the RSI indicator remains at 53.37 value. The trend overview that we have concluded for the FBM KLCI indexes is moderate or downtrends. These technical asset rotations, while the broader index faces headwinds, consumer products and services stand out with the strongest defensive technical setup amidst index heavyweight drags.
Good day everyone. Today I will conduct a high-impact technical performance analysis of Telkom Malaysia Berhad. We will evaluate TM's historical price actions, dissect key momentum indicators, and conclude with our strategic investment recommendation and long-term outlook. Starting with market performance, Telkom Malaysia has significantly outperformed the benchmark FBM KLCI. TM recorded a stellar net gain of positive 14.16% compared to the index modest rise of 6.06% as plotted on the chart to your right. TM maintained a resilient upward trajectory, consistently holding a healthy premium over the broader market. Breaking down the trend, TM experienced a powerful primary bullish phase from mid-2025 to late February 2026, peaking near positive 22%. This massive expansion was structurally driven by TM's Azhar AI-ready data launch and soaring cloud demands. Following this, a secondary correction occurred around May 2026, triggered by short-term sentiment pressure from a one-off 5G capacity financial write-down. Turning to our indicators, a pronounced Bollinger Band squeeze through June and July 2026 highlight low volatility and heavy price consolidation. Looking at the moving averages, our system captured a golden cross buy signal in July 2025, followed by a corrective dead cross in March 2026. Currently, price action is recovering and having established rock solid support at the lower band. Our momentum indicators confirm this recovery. The MACD registered a fresh bullish crossover on June 17th with an expanding positive histogram. Simultaneously, the RSI has bounced cleanly off its 14% support level to a healthy 58.67%. Crucially, on balance volume remains incredibly strong at 988 million, indicating steady institutional accumulation during this sideways phase. Based on these metrics, our ultimate investment recommendation is a strategic hold. While the short-term MACD indicates a tactical buy, the broader indicators including Bollinger Bands, EMA, RSI, and OBB collectively support a hold. Our execution strategy is simple: exercise patience, protect capital, and wait for a high volume breakout above major moving average. In conclusions, while TM is in a short-term consolidation phase, its structural thesis remains highly attractive. Long-term value will be unlocked by the scaling of the Azhar AI data center emulation national sovereign cloud architecture. The immediate sideways price action is temporary. The long-term fundamentals are fully intact. That is all for me. Thank you for listening.
Good afternoon, everyone. Today we look at the Maxis Berhad technical performance. The standout feature here is the sector decoupling, while the broader telecom sector collapsed by 17.52%. Maxis has completely broke it away from its peers. It established a strong upward channel from mid to late 2025, showing a great defensive resilience during the mid-year market pullbacks. So currently, Maxis is performing the benchmark index, posting a net gain of 2.12% against the FBM KLCI's plus 1.88%. This proves that Maxis is acting as a safe haven, driven by its own strong internal tailwinds rather than industry trends itself. Looking at the long-term perspective under Dow theory, we can trace a powerful primary bullish trend running from the end of March to late November. This took consistently created a higher structural lows along a clear support trend line. This advance accelerated sharply in late August where the price broke key historical resistance, eventually driving the assets to its technical peak of approximately 4.20 ringgit in November. Fundamentally, this massive accumulation phase was fueled by the Maxis fully developing its 2100 MHz spectrum to boost nationwide 5G network performance. Every primary advance faces a counterwave. Here, we observe a clear secondary correction phase running from mid-May through the end of August. This correction was defined by a major consolidation period, triggered by a sharp structural breakdown on the May 20th that dragged the assets to 3 36 cents. Market sentiment turned defensive during this window due to institutional uncertainty regarding a Maxis commercial transitions to the national 5G dual network model. This raised earnings fears, causing a healthy pullback to test a Maxis long-term support. Let's apply our technical overlays, starting with the Bollinger Bands. We recently witnessed a classic volatility squeeze where the bands tightly constricted around the price, signaling an imminent breakout. Looking at the current price action, the stock has found strong support and launched an upward path immediately after successfully bouncing off the lower band, with the upper band at 3 ringgit 58 cent and the lower at 3.24 ringgit. This bullish bounce is heavily confirmed by a visible spike in buying volume, showing that the buyers are firmly regaining control in the market. Next is our trend following a double EMA system, utilizing the 20 and 50-day moving average. Historically, this system gave a flawless buy signal via a golden cross on the September 2nd, 2025, which kicked off the major bull run. Later, a bearish death cross on March 9, 2026 flagged the transition into our current consolidation phase. Right now, the 20 EMA stands at the 3 ringgit 44 cent and the 50 EMA is at 3 ringgit 46 cent. This resulting 2 ringgit spread tells us that the market is in tight equilibrium cooling for its major directional move. To confirm our momentum, we turn our three core oscillators. First, the MACD printed a fresh bullish crossover on June 18, 2026, with a growing positive histogram that mathematically confirms a returning bias. Second, the RSI executed a perfect floor bounce right off its 40 support level and has climbed to 60.78%, showing a strong bullish alignment without being overbought. So finally, Focus on the on-balance volume sits at a massive 408.07 million with a stable daily transactions volumes. This validates that this recovery is fully backed by a real capital accumulations in the Maxis Berhad. In conclusion, our technical scorecard is heavily defensive to bullish. We have one action buy signal from the MACD, 0 sell signals, and also 4 stronghold signals from our remaining indicators. This indicates a strict execution protocol. So, for existing investors, the action is to firmly hold your position. Your capital is safe and you should wait for a breakout past the 3.58 ringgit resistance. For potential investors, you should remain disciplined and sidelined. Wait for the secondary EMA confirmations and do not front-run the 5G catalyst. Next, I pass to the next presenter for the next company.
So let's start by comparing Mr. DIY stock performance against the broader market, represented by the FTSE Bursa Malaysia KLCI. Looking at this chart, we can see two different stories. Mr. DIY, showing here, is currently trading negative 3.95% below its starting point, while the KLCI index has climbed up to 5.34% over the same period. This tells us that Mr. DIY has clearly underperformed the broader market. The primary movement for Mr. DIY has been downward trend, while the index have moved upward. Interestingly, both saw the pullback and rally in June and July in 2026. Mr. DIY pullback was linked to the stock going ex-dividend, while the index rally was driven by the domestic institutional support, strong tech stock performance, and easing geopolitical tensions. Now let's look deeper into Mr. DIY price trend using trend lines. We identify a primary downward trend connecting the peak of 2 ringgit 30 in November 2025 down through the lower highs around 1 ringgit 90 in the March 2026 and sloping toward the current price of about 1 ringgit 70. Despite an initial rally, the stock still sits well below its all-time high, plus 28%. So we identify a secondary trend connecting the low of 1 ringgit 30 in March 2026 through progressively higher low, showing the buyers tap in at higher level since the crash bottom. However, the price is currently trading just below the descending resistance line, meaning it's still capped by the primary downtrend. So moving on to our technical overlay, starting with the Bollinger Bands. Right now, the upper band sits at 1 ringgit 71, the middle band at 1 ringgit 65, and the lower band at 1 ringgit 59. The current price is sitting right at the upper band, which signals an overbought conditions, meaning there are a real chance of the pullback in the near term. Based on the signal alone, the indicated action would be to sell the position, as the stock may be due for correction after this risen up toward the top of the band. Next, we look at the double EMA crossover, which tracks the 20-day and 50-day expositional moving average. A golden cross happens when the fast EMA moves above the slow EMA, signaling a buy, and that last occurred on January 9. A dead cross is the opposite, where the fast EMA drops below the slow EMA, signaling a sell, which last happened on May 25. Right now, neither crossover is happening. The fast EMA has not broken above the 50 EMA, and there's no fresh decline crossing below its area. So for this indicator, the recommendation is to hold and wait for the clearer confirmation. Now for our momentum oscillators, MACD and RSI. The MACD line has crossed above its signal line, which is a bullish signal, and last triggering on buy on June 16, 2026. This is supported by the growing histogram and price moving in the upward directions. Meanwhile, the RSI has also crossed above its signal line, currently sitting at mid-range level of around 58.64, meaning there's still room to run before it's become overbought at 70. Since both indicators align and support each other, the recommended action here is to maintain the position and hold the stock. Bringing all of our indicators together, here the summary. Bollinger Bands, double EMA, MACD, and RSI all point to a hold. Only OBV suggested a sell, and that's specifically for existing investor. Overall, for existing investor, to tally is 0 buy signals, 1 sell signal, and 4 holds, leading to a final decision of hold. For potential new investor, is 0 buy, 0 sell, and 5 holds, also leading to overall hold decisions. In short, None of our indicators are giving us strong enough buy signals to recommend a fresh entry right now, and there is not a strong enough sell signal either to justify existing investor existing completely. To conclude, our analysis shows that Mr. DIY has been in bearish direction overall, with a downward trend running from late October 2025 through early July 2026, and it's continued to underperform the broader FPI KLCI index. Based on our full sets of technical overlays and oscillators, the consistent recommendation across the board was to hold, since there was not strong enough confirmation from either the indicators or trading volume to justify buy or sell. For existing investors, the best approach is to hold and wait for price to break out with the bullish signal. For potential investors looking to enter, it's best to wait for a clear MACD crossover and for RSI to move into the oversold territory before entering the market. Inshallah.
Assalamualaikum sir. In this section, I will compare the performance of EcoShop Marketing Berhad with the FTSE Bursa Malaysia Index or FPM KLCI over the selected analysis period. As shown on the slide, EcoShop recorded a return of 16.54% while the FPM KLCI gained 11.54%. This means EcoShop outperformed the overall Malaysian stock market by approximately 5 percentage points. The main reason for this stronger performance was the company's continuous business expansion and increasing consumer demand. Investors become more confident in the company's future growth, resulting in stronger buying interest. However, both EcoShop and the FBM KLCI experienced a price decline between March and May 2026. This pullback was mainly caused by profit taking and broader market uncertainty rather than a deterioration in EcoShop's business performance. Next, I will explain the trend analysis using Dow theory. During the period from July 2035 until February 2026, EcoShop was in primary bullish trend. The sharp price increased steadily from around RM1.15 to RM1.60, showing higher high and higher low, which are characteristics of a strong uptrend. One of the important factors behind this price increase was the completion of 47 distribution center project outlets, which strengthened investors' expectation for future growth. After reaching its peak, the stock entered a secondary correction between March and May 2026. During this period, the price dropped to approximately RM1.20 due to profit taking after the previous rally. Even though the price corrected, the company's fundamentals remain stable. Therefore, this correction was considered temporary rather than a reversal of the long-term bullish trend. Moving on to the Bollinger Band analysis. Before the price increased significantly, the Bollinger Band became very narrow during May and June 2026. This condition is known as a Bollinger Band squeeze, which indicates low market volatility and often signals that a major price movement is about to occur. Shortly afterward, the share price broke above the middle band and moved toward the upper band near RM1.50. This breakout indicates that bullish momentum was strengthening. At the same time, trading volume also increased during the breakout. High volume confirmed that more investors were buying the stock, making the bullish signal more reliable. Therefore, the Bollinger Band suggests that EcoShop is experiencing strong buying momentum and that the upward trend is likely to continue. Next is double exponential moving average. On 24 December 2025, the 20-day EMA crossed above the 50-day EMA, forming a golden cross. This is a strong bullish signal because it indicates that long-term prices are rising faster than long-term prices, suggesting the beginning of an upward trend. Later, On 12 March 2026, a death cross occurred when the 20-day EMA moved below the 50-day EMA. This signaled temporary bearish momentum during the market correction. However, after the correction ended, the 20-day EMA crossed back above the 50-day EMA. This indicates that bullish momentum has returned and the previous bearish trend has weakened. Therefore, the recommended strategy is to hold existing shares while new investors may consider buying if the price experiences another healthy pullback. Next are the technical oscillators, which include MACD, RSI, and OBV. First, the MACD showed a bullish crossover in mid-June 2026, and the positive histogram indicates that buying momentum is become stronger. This supports the continuation of the bullish trend. Second, the RSI is currently 70.61. The RSI rebounded from below 40 to above 70, confirming strong upward momentum. However, because it is approaching the overbought zone, there is a possibility of a short-term price correction. Finally, the on-balance volume, or OBV, increased sharply to 233.12 million, showing that investors are accumulating the stock and buying pressure remains strong. Based on these indicators, existing investors are advised to continue holding their share while closely monitoring the RSI and trading volume for any sign of weakness. Finally, I will conclude the technical analysis. Overall, most of the technical indicators support a hold recommendation. Bollinger Band, RSI, and OBV all suggest that the bullish trend remains intact, while the double EMA and MACD continue to provide positive signal. For existing investors, the recommendation is to hold their current position as the overall trend remains positive. For potential investors, it is better to wait for either a price pullback or a stronger breakout confirmation before entering the market. In conclusion, EcoShop has outperformed the FPM-KLCI due to its strong business expansion and positive investor sentiment. Although the RSI indicates that the stock is approaching the overbought level, the overall technical indicators continue to support approaching a bullish outlook. Therefore, the overall investment recommendation is hold.
Now I present the overall recommendation and conclusion based on our technical analysis. Based on the analysis of the four selected companies, which are Telekom Malaysia, Mrs. Berhad, Mr. Dewa Berhad, and EcoShop Marketing Berhad, we found that each company showed different performance compared to the FTSE Bursa Malaysia KLCI or FBM KLCI. The result also showed that the communication and retail sectors reacted differently depending on the market situation during the analysis period. Among these companies, Telekom Malaysia showed the best performance due to its strong business position, continuous growth in digital infrastructure, and positive technical indicators. Meanwhile, EcoShop Marketing Berhad also showed a positive potential because of its strong market momentum and business expansion. However, Mrs. Berhad and Mr. Dewa Berhad showed lower price movement. Although both companies showed some recovery, their prices are still moving in a consolidation phase. Therefore, investors should wait for clearer signal before making investment decision. Through this analysis, we found that technical indicators such as Bollinger Bands, double EMA, MACD, RSI, and OBV can help investors identify market trends, price momentum, and possible entry or exit points. However, technical analysis alone is not enough. Investors should also consider the company's financial performance, industry condition, and overall market environment. In conclusion, our recommendation for the four selected companies is hold. Existing investors can maintain their current position while continuing to monitor future market movement. For new investors, it is better to wait until stronger positive signal appear. such as a breakout or improvement in technical indicators before entering the market. Thank you.